Hey everyone, and welcome back to the Tesla Stock Podcast. This week, Tesla served up smash burgers and a vision of the future in Hollywood. But just around the corner, a grim financial reality is waiting, with an earnings report on deck and some truly worrying sales data coming out of its biggest market. With the stock trading around the $333 mark, we need to separate the sizzle from the steak and look at the hard numbers. Let's start in Hollywood, where the much-anticipated Tesla diner officially opened its doors this week. The scene was exactly what you'd expect. A parade of Cybertrucks and Teslas lined up around the block, a two-story retro-futuristic building with two massive movie screens, and a 24/7 menu of American classics served in Cybertruck-shaped paper boxes. The diner features 80 superchargers, a no-tipping policy where Tesla covers a 20% tip pool for all staff, and even an Optimus robot serving popcorn to amused fans. It is, by all accounts, a masterclass in brand experience, designed by Tesla's lead designer Franz von Holzhausen, and operated by two veteran LA restaurateurs. Elon Musk has said that if this diner is successful, Tesla will establish more in major cities around the world, creating islands of good food, good vibes, and entertainment at its charging locations. And the opening day was a massive success, with thousands of customers flocking to the site. But it also perfectly captured the polarizing nature of the brand today. Outside, a protester paced with a sign that read workers should have power, not the billionaires. He called the opening a secret grand opening and vowed to organize larger protests, saying, "We will do everything in our power to get him to sell this place and get out of here." The Tesla diner, it seems, is a perfect microcosm of the company itself, loved passionately by its fans and deeply opposed by its critics. But while the diner serves up burgers, Wall Street is getting ready for Tesla to serve up its second quarter earnings report, which is scheduled for Wednesday, July 31st. And the expectations are not pretty. The consensus on Wall Street is for revenue to come in around $22.20 billion, which would be a significant drop from the $25 billion it delivered in the same period last year. Earnings per share are expected to fall to around 40 cents, down from 52 cents a year ago. This continues a troubling trend. For the last 3 quarters in a row, Tesla's actual revenue has come in below Wall Street expectations. And with vehicle deliveries already announced and down 13.5% year-over-year, there are few places to hide. Last quarter, the company blamed its poor performance on the Model Y production changeover. It doesn't have a similar excuse this time. So, what should we expect on the earnings call? Most likely, we'll see the now familiar Elon Musk playbook. Acknowledge the poor results briefly, and then aggressively pivot the conversation to the future. Expect to hear a lot about the promise of the robotaxi network, the progress of the Optimus robot, and other AI ventures, narratives of future growth designed to distract from the current lack of. And if you want to see just how real that lack of growth is, you only need to look at our final story, which contains some of the most concerning data we've seen in a while. A new report from the California New Car Dealers Association shows that Tesla's sales in California, its biggest and most important market in the U.S., plunged by 21% in the second quarter. This isn't a blip. It is now the 7th consecutive quarter of year-over-year registration declines for Tesla in the state. Now, a common defense might be that the whole EV market is slowing down. But the data from California completely refutes that. In fact, most other brands, including direct luxury competitors like BMW, Mercedes, Cadillac, and Genesis, are seeing significant sales and growth in California. The report makes it clear. Tesla's decline is so steep that it's actually pulling down the entire market share for zero-emission vehicles in the state. Tesla's weakness is becoming a market-wide problem. This suggests the issue isn't EV demand in general, but demand for Tesla specifically, which is a much more alarming problem for the company as it faces increasing competition and ongoing brand damage. So, to sum it all up, we have the grand opening of the Tesla diner, a brilliant piece of marketing that perfectly encapsulates the power and the polarizing nature of the Tesla brand. We have a looming earnings report next week, where we expect to see weak financial results and a strong pivot to future narratives. And we have undeniable, Hard data showing a serious and prolonged sales collapse in Tesla's most important US market. A collapse that is unique to Tesla and not affecting its competitors. So with the earnings call just about a week away, my question for you is this. What matters more to you as an investor? Is it the cultural buzz and the future vision represented by things like the Tesla diner? Or is it the hard financial data, like plunging sales in California and declining revenue? What will you be listening for on the call to guide your investment decisions? Let me know your thoughts down in the comments section below. As always, if you found this breakdown valuable, please hit that like button. Subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.